Hello, thanks for watching. Welcome back to the next video in my series. Now, as usual, a few things before we get started. Please feel free to follow me here on YouTube, Facebook, TikTok, or Telegram. That's way when I upload a new video, you know about it, and it's always nice to connect with my viewers online. If you like the video, please give the thumbs up, share it with classmates or colleagues, or put it on a playlist. That does encourage me to keep making them for you. If you think there's something I can do better, please leave a comment below the video, and I will take those ideas into account when I make new ones. Let's get started.
1. Beliefs that distinguish right from wrong. Personal compass. Ethics starts with our internal sense of morality. What we individually believe is right or wrong. This is shaped by our upbringing, values, and experiences. Foundation for decisions. In accounting, we face many situations with gray areas. Our ethical beliefs guide us to make sound choices, even when there's pressure to do otherwise. 2. Accepted standards of good and bad behavior. Professional codes. Accountants adhere to codes of conduct, like those from the AICPA or IFAC. These codes set specific expectations for ethical behavior, going beyond personal beliefs. Public trust. Society relies on accountants to provide accurate and honest financial information. Ethical standards ensure this trust is upheld, maintaining confidence in the markets and businesses. Why ethical behavior is crucial in accounting. Preventing fraud and misconduct. Strong ethical principles deter individuals from manipulating financial data, misleading investors, or engaging in other harmful practices. Protecting stakeholders. Ethical accountants protect the interests of investors, creditors, employees, and the public by ensuring financial information is transparent and reliable. Maintaining a positive reputation. Ethical behavior builds a strong reputation for both the individual accountant and the profession as a whole. Recent corporate scandals. Financial losses. Investors and creditors can suffer huge losses when companies misrepresent their financial position. Job losses. Companies involved in scandals often face bankruptcy or downsizing, leading to job losses. Erosion of trust. These scandals damage the public's trust in businesses and the accounting profession. Developing ethical behavior. Ethics is an ongoing journey, not a destination. Here's how accountants can cultivate ethical behavior. Continuous learning. Stay informed about ethical standards and best practices through professional development. Seeking guidance. Consult with mentors, colleagues, or ethics hotlines when facing challenging situations. Speaking up. Have the courage to raise concerns about unethical behavior, even when it's difficult. By prioritizing ethics, accountants can ensure the integrity of financial reporting and contribute to a more trustworthy and sustainable business environment. These guidelines provide a simplified framework for ethical decision-making in accounting. Here's a breakdown. 1. Identify ethical concerns. The foundation of ethics. This step emphasizes the importance of personal ethics. Your internal moral compass and understanding of right and wrong are the starting point. It's about recognizing situations where your values might be challenged or where there's a potential for unethical behavior. Examples in accounting. A client asks you to manipulate financial statements to make their company look more profitable. You notice a colleague is claiming expenses they didn't incur. You're pressured to overlook a potential accounting error that would benefit your company. 2. Analyze options. Exploring consequences. This step encourages you to think critically and consider all potential outcomes of your actions. It's about looking at both the short-term and long-term effects, and the impact on all stakeholders involved, clients, colleagues, the public, etc. Key considerations. Legal implications. Are there any laws or regulations that might be broken? Professional standards. Do your actions violate any codes of conduct or ethical guidelines for accountants? Reputational risks. How will your actions affect your reputation or the reputation of your company? Impact on others. Who will be affected by your decision, and how? 3. Make ethical decision. Weighing the options. After carefully analyzing the potential consequences, you need to make a decision. This involves choosing the option that best aligns with your ethical values and minimizes negative outcomes. Difficult choices. Ethical dilemmas are rarely easy. Sometimes there's no perfect solution, and you may have to choose the least bad option. Documentation. It's often helpful to document your decision-making process, including the reasons for your choice. This can be useful if you need to justify your actions later. Important considerations. Framework limitations. While this framework provides a basic outline, ethical decision-making in accounting can be complex. It's essential to consult with colleagues, mentors, or professional organizations when facing difficult situations. Professional codes of conduct. Accountants are often bound by specific codes of ethics, e.g., the AICPA Code of Professional Conduct. Familiarize yourself with these codes as they provide detailed guidance on ethical behavior. Continual learning. Ethical standards and regulations can evolve. Stay informed about current best practices and engage in ongoing professional development to maintain ethical awareness. By following these guidelines, accountants can navigate ethical challenges and make responsible decisions that uphold the integrity of the profession and protect the public interest. Here's a breakdown of why they're so important. Generally Accepted Accounting Principles, GAAP. GAAP is like a rule book for accountants. It ensures that financial reporting is consistent, transparent, and reliable. This is crucial for investors, creditors, and other stakeholders who rely on this information to make decisions. 1. Relevant information affects the decision of its users. Meaning, financial information is relevant if it can influence a user's decision-making. It should help them assess the past, present, or future of a company. Example, a company's current profit or loss is relevant to an investor deciding whether to buy their stock. Information about past sales trends could be relevant to a bank considering a loan application. Why it matters. Without relevant information, users are essentially making decisions in the dark. 2. Reliable information is trusted by users. Meaning, reliable information is accurate, unbiased, and verifiable. Users can trust that it represents the economic reality of the situation. Example, a company's financial statements should be free from significant errors and should accurately reflect the value of its assets and liabilities. Independent auditors help ensure reliability. Why it matters. If financial information can't be trusted, it's useless for making sound decisions. Inaccurate information could mislead investors and creditors, leading to poor choices and potentially financial losses. 3. Comparable information is helpful in contrasting organizations. Meaning, comparable information allows users to easily compare the financial performance of different companies. This is possible because GAAP provides a standardized framework for reporting. Example, investors can compare the profitability of two companies in the same industry by looking at their income statements, knowing that both companies followed the same rules when preparing those statements. Why it matters. Comparability helps investors and creditors assess the relative strengths and weaknesses of different companies, enabling them to make informed investment and lending decisions. In essence, GAAP aims to make financial information useful. By ensuring that information is relevant, reliable, and comparable, GAAP helps users make informed decisions about resource allocation.
Finally, if you like the video, please give it a thumbs up and share it with classmates or colleagues. Please feel free to follow me here on YouTube, Facebook, TikTok, or Telegram. It's always nice to hear from you. If you think there's something I can do better, please leave a comment below the video. So, thank you very much for watching. I wish you the best of luck in your work and studies. I look forward to seeing you again next time.